arguments from both the sides. Considering the positive of the time, the learned speakers have burnt their midnight oil, and we are sure we will be enlightened by the light of the oil burn and their efforts. Friends, usually it is a pleasant task of introducing the speakers, but it is very difficult for me today to introduce someone who is known to everyone. However, I will do it as a formality. Shri Vipul Joshi is a qualified chartered accountant as well as a law graduate, practicing as a tax advocate for more than 25 years. He is actively involved with various professional organizations and bodies. He is a chairman of All India Federation, ex-chairman of All India Federation of Tax Practitioners of West Zone, and he is a treasurer for AIFTP. He is a national treasurer. He has presented papers and given lectures as various seminars in and outside Bombay on various platforms. He regularly contributes articles in the newspapers and magazines. Mahendra Sanghvi is a practicing chartered accountant, past president of CTC. He is a chairman of Law and Representation Committee of CTC. He is nominated as a member of Regional Direct Tax Advisory Committee by CBDT. He is a member of Direct Tax Committee of IRC. He has written papers and given various lectures and meetings organized by CTC, ECA and ICAI. With this, I request our Vice President, Joshi, please enter for comment. Sir, the podium is all yours.
Friends, after the tribunal heard the matter, there were different opinions between the two members. So we decided to refer the matter to a senior third member. But unfortunately, ill health, the third member requested that we sort out the issues and deliver the judgment. So that might we again met. We have tried to reconcile our views, and so we only will be now passing the final order. Friends, there are about 6 matters which are listed today. Since the matter number 6 is very exhaustive, very lengthy, so I request my co-brother to give verdict on case number 6.
Vice President Charu, convener, and Vipul by my very dear friend. At the outset, let me thank Chamber for giving me an opportunity, first of all, as for the mock tribunal to become a member along with Vipul. And well, unexpectedly, even to deal with the paper, as though the paper writer is not there, but nevertheless, the issues which have been raised by him in the case studies, we shall be dealing with this. I've been told that let me start with, let me take up case study number 6, which otherwise was for the paucity of the time. We could not allow the DR and the AR to give their views and justify their case fully. Nevertheless, the time always looking at the complexities in the case, and not only in case number 6, all other cases also. The time we always feel that is short, and I always appreciate Sharma ji, always been saying that education के लिए कभी कोई सीमा ही नहीं है, any time कम सीमा ही है. We need to appreciate that also. But the organizers have their own limitations of timings. Organizers have other scheduled programs, and which we also would like to enjoy those programs and take the benefit of that. Friends, the case study number 6 is dealing with demonetization, and the other part is the gift part, that is section 56(2)(7). I would, before running away straight, or before considering the direct case, I would like to understand what are the amendments which have been carried out on account of demonetization. And first of all, it is the Taxation Law Amendment Act 2016, which has been with effect from 15 December 2017. In this amendment, in this Taxation Law Amendment Act, there have been 3 sections which have been amended or inserted, and the scheme called as Pradhan Mantri Garib Kalyan Yojana scheme, which has been inserted. To have a little background of section 115 BBE, unless we really have a background, we would not understand why the assessing officer wants to treat the income which otherwise either have already been disclosed by the assessee in his return of income, why he still wants to treat that income under section 68, 69, 69A, B, C or D. Henceforth, in my talk, I would consider this section 68, 69 to 69D as the specified section. So why does the assessing officer wants to transfer this income or treat this income under this specified section? To have this background, originally this section 115 BBE was inserted from assessment year 2013-14. Now, if any additions were made on account of this specified section, then the tax at the rate of 30% will be payable. That is what the provision says for the assessment year 13-14 to assessment year 16-17. And to be precise, it is 13% plus the education cess, which will come to 30.90%. And now, by way of this Taxation Law Amendment Act, this section has been amended, which is applicable for the assessment year 2017-18 and onwards, which says that the amendment has 2 parts. Number one, which is again a sub-part, total income includes any income referred to in specified sections and reflected in return of income furnished under section 139 by the assessor. So it makes it very clear that the provision provides that the assessee can declare on the income under this specified provision, specified sections. So I would understand that this is a disclosure scheme wherein you may not disclose the sources, but those assets and the incomes can be disclosed under this section while filing your return of income, and it's a perpetual disclosure scheme. The second sub-part of us, which says total income determined by assessing officer includes any income referred to in the specified section. And in those two cases, that is the first part, the assessing officer himself so modo declares, or if the assessing the assessee so modo himself declares, or the assessing officer treat the income under specified section. In any of the cases, the income tax payable would be 60%. And the same has to be increased by way of 25% as a surcharge, and in addition to that, the education cess, which will in turn work out to 77.25%. After this amendment, one more amendment which had come by way of Rule 114B, which required the bankers to upload the details of the cash deposit made by their clients or the customers in the period 8/11/2016 to 31st of December 2016, and the last date of that upload was 31st of March 2017. And thereafter we have seen that there is Operation Clean Money, which has been already uploaded on the websites, and that gets updated on the regular basis, and wherein we also saw today's newspaper that 9 lakhs accounts have already been covered for this cash deposits. In addition to that, the return of income, that is the ITR 4 and 5, which is concerned with the business assessees. For assessment year 16-17, there is a specified field wherein if income is offered under section 60, under the specified sections, 115BE will trigger and the tax will automatically be calculated at the rate of 30.9%, which is for the assessment year 16-17. Now, having this background, let us understand the intricacies of these cases. Sab kuch chalta hai. This is the name of the SSE. Being long, henceforth I will say only SSE. He had deposited 5 crores. Before that, the assumption is that we are somewhere in the financial year 2021 or maybe thereafter, because here it is pertaining to assessment year 17-18. Thereafter additions are made. The CIT appeal has also given his verdict and the matter is before the tribunal. The first issue is about the additions made of 5 CR, which is in 3 parts. The addition is made under section 69A for the specified bank notes, that is SBN, during the period of 9/11/16 to 30/12/16. Number 1, the SSE had revised return of income for assessment year 16-17 on 28th of February 2017 and paid tax at the rate of 115 BBE on income offered of rupees 1 crore. So, as earlier I told you, because it is pertaining to assessment year 16-17, the tax was paid at the rate of 30%. And this cash which was declared by way of a revised return of income, it is shown as cash in hand as on 31st of March 2016, and thereafter it has been deposited, which is part of that 5 crore rupees. The first issue arises is whether the return revised under section 139(5) is a correct revised return or it should not be considered by the assessing officer. The return can be revised only if the assessee discovers any omission or any wrong statement. Now here it would be difficult for an assessee to substantiate that there was some omission or a wrong statement to the extent of 3.5 CM, saying that he had missed out that particular entry, which was a cash in hand, or there was an omission, unless it is substantiated it's very difficult, and I'm sure the substantiation of that also would be not easy for him to consider. And the group leader has rightly considered 201 ITR Guwahati High Court, wherein they have mentioned that under what circumstances the return can be revised. And this case would not be this case would be covered against the SSE, saying that the return of income cannot be revised. And secondly, after this amendment, that is the Taxation Law Second Amendment Act 2016, which has come with effect from 15th of February, the SSE had thought that yes, it is better that I deposit this amount today and revise my return of income showing that. So it is an afterthought which the assessing officer will try to prove. And thirdly, the assessing officer will invoke, or he has already invoked section 69A, which says, if the explanation offered by the SSE regarding the acquisition of money is not satisfactory to the AO, it may be deemed to be the income of the SSE for such financial year. So here the deposit what the assessing officer has seen in his bank account is in the financial year 16-17, and it is in this financial year the income would be taxed as under section 69A. Therefore, considering all these three grounds, my humble view would be that it would be very difficult for an SSE to come out of this 5 crore cash deposited, and the additions made by the assessing officer would remain. The second one is SSE has made cash sales of 3.5 crore. Now sales are, as mentioned here by the paper writer, the sales are abnormal in the sense they are abnormal to the extent that the margin is 100 times more than the margin what he has been disclosing in his regular return. And the quantum wise also the sales during this period 9/11 to 30/12 are several times higher, and which you can say that never be the case, and which has, in fact the fact says that which has never been the case since the inception. We appreciate the argument saying that yes, it's a one-time opportunity that the SSE had got. I do not disagree to the facts, and the newspapers also did report that the businessmen have taken a benefit of this. They had an advantage to make a business, but these more advantages were in the industry of jewelry, diamonds, etc. Nevertheless, I do not deny that there could have been an advantage to an industry like luxury brand accessories also. But considering the facts that the gross margin jumping 100 times, the sales which were very nominal throughout the inception of this person, and all of a sudden the sales have also gone multiple times in cash, this all would lead to a suspicion that the accounts which are made up are correct, and the learned AO has not accepted the sales as genuine in the assessment order. The learned AO has noticed that such type of sales has never been in history of SSE, quantum wise also or margin wise also. Assuming that this type of opportunity is one-time opportunity, the SSE is not able to produce any person who has purchased goods from him. Therefore, the source is also doubted. We can understand that he may not be required to produce anybody. They're looking at the entire quantum of 3.5 crore. If none of the SSE, none of the sales parties can be produced, and I'm sure it would be very difficult because the person who has made the payment also in cash, I'm not entering into the legality whether it was a legal tender or not, and that in the mock tribunal we did hear to the AR and DR saying that whether the legality is there or not, and we are restricting ourselves to the scope of the Income Tax Act and not to the other allied laws. Therefore, the AO over here will have to reject the books of accounts under section 145(3) by not accepting his sales, and thereby the gross profit margin which he has already disclosed will be reduced from his regular profit, and the entire sales proceeds to the extent of 3.5 crore will be taxable under section 69A. This is my view. Since the books of accounts is rejected and for the reasons discussed, the source of cash deposit are not explained and addition made under section 69A would stand. The third one would be SSC had huge cash in hand of 50 lakhs, and for several years he has been continuing, and it is demonetized and it is demonstrated by him from his audited accounts for all the earlier years. I appreciate during the argument that just merely because he has a cash in hand, it is the prerogative of the SSC. He needs to decide why he wants to keep this 50 lakhs. He wants to decide where he wants to spend. He doesn't want to spend. It is his security, safety. He doesn't have trust on bank, etc., etc. These all can be the reason for holding this 50 lakh rupees for a longer period. The assessing officer merely cannot make an addition on the basis of a suspicion, saying that, look, you cannot have this 50 lakh rupees cash in hand, and that today you want to deposit it after this demonetization. So though the cash in hand was there for a longer period of more than 5 years, now that this cash in hand, what he holds, becomes an illegal tender, he had no other option but to deposit this 50 lakh rupees into the bank account. And therefore, I think it would be a good case that the assessing officer should not have made addition on account of this. Now, one should not forget that the Supreme Court decision in the case of Sumti Dayal and P. Mohan Kala, based on preponderance of probabilities of human conduct. Here, I am very sure that all this discussion, what we have done, the additions are done by assessing officer, and the assessing officer will be doing these additions. And it will be difficult for the CIT appeals also to delete it, except for that one will have to fight the case before Mr. Vipul Joshi in the tribunal, or if Vipul Joshi has been elevated as a High Court judge, maybe you may have to travel till the High Court. The second issue raised over here is of rupees 50 lakhs additions made under section 68. Here SSC has accepted 50 lakhs from Mr. A, and Mr. A has already made a declaration under the Pradhan Mantri Garib Kalyan Yojana. And we presume, though the facts are not saying, and we presume that the declaration has been accepted